Welcome to ForexTV.com. Today's Monday, February 2nd. I'm Tim Kelly with your New York Forex Market Buzz. The dollar and yen strengthened overnight, and the euro declined against the yen. And now for a look at the latest headlines from the CEP news desk. The December rebound in U.S. manufacturing activity was largely dismissed by most economists, who say the revival in manufacturing sector isn't expected before mid-year. The Institute for Supply Management reported that its manufacturing survey rose to 35.6 from a previous reading of 32.9. Construction spending in the United States continued to fall in December by 1.4% month over month. The consensus had forecast construction spending to decline by 1.2%. The total construction figure for November was revised upward to negative 1.2 from negative 0.4%. Personal income dropped less than market expectations in December, while personal spending was slashed more than expected. Total personal spending, which comprises roughly 70% of U.S. gross domestic product, fell 1% in the month, following a cutback of 0.8% in November. Annually, spending has fallen 1.1%. Today, we're joined by Vasily Serebriakov of Wells Fargo. Hi, Vasily. Thanks for joining us today.
Thank you.
Well, today manufacturing contracted. We got the information out from ISM. Manufacturing contracted for a 12th straight month in January, and stocks and crude futures jumped initially on the news, and the dollar weakened against the high yielders as it gained on the yen. But why don't you give us your thoughts on today's events? We had personal income and outlays as well. Not too much of a change there, but ISM was the big number today, right?
Yes, pretty much so. We did see some small improvement in January compared to December, but of course the number is still extremely weak and very much in recessionary territory. The small improvement is consistent with slight gains in some of the regional Fed manufacturing surveys. However, we don't think that changes the overall economic picture. As far as the dollar, I think risk appetite is still the main driver. So we have seen swings back and forth based on equity market sentiment and general risk appetite today.
Right. So we saw the yen gain here. Let me just take a look at the ProStix data center. We saw a high of 90 and a low of 88.80. We're actually just reapproaching the highs for a dollar right now. That would be a bit inconsistent with this flight to safety, though, right?
Well, I think the flight to safety mostly happened overnight and early in the session. We did see somewhat of a rebound in risk appetite and equities getting somewhat less weak as the U.S. session progressed. But again, I don't think those moves that changed the overall market direction. And in particular, the biggest mover was probably the euro against the yen, and that has been tracking equities fairly closely today.
Right. Now, Vasily, looking at the week ahead, we've got a couple of key events. One you mentioned is ECB, and the other is the Bank of England, where they're widely expected to cut rates by a full point. Can you give us maybe your thoughts on what might happen if they do cut by 1 point? Is that already in the market? And if they fall short of that or go even more aggressively, which is quite unlikely at this point, what can we expect?
We do think they will cut 100 basis points. This is most likely not the last cut in the current easing campaign. We could also see continued hints that the Bank of England is going to employ some of those non-conventional measures to stimulate the credit markets. I don't think the 100 basis point rate cut will be much of a surprise to the market in this context.
And what about any ECB activities? Trichet's obviously been in the press quite a lot, especially during the Davos last week and over the weekend. What are your thoughts on any ECB activities?
The ECB have been fairly vocal in stating that they're not intending to cut rates at the February meeting. However, they have hinted that March meeting is the likely time where rates should go down. What we do see them doing perhaps at this meeting on Thursday of this week is not cutting rates, although there's probably a marginal chance of that. But most likely they won't cut rates, but reaffirm and underline the commitment to do so in March. In either event, we don't really see the ECB rate meeting as a positive event for the euro. So we would, on balance, expect a weaker European currency after the event.
Okay. Now, Vasily, I want to just go back to the commodity currencies. We dipped under $40 a barrel in oil today. We see the Canada and New Zealand, specifically New Zealand, has seen some lows we have not seen, and Aussie under pressure as well. Give us some thoughts on the commodities play here.
The Australian Central Bank is meeting later today, and they should be cutting by 100 basis points as well. I think the commodity currencies are probably very closely linked to the durations in equities and risk appetite, but we believe that the overall direction is still lower for those currencies. We might see the Australian dollar outperform the New Zealand dollar and the Canadian dollar somewhat, given that Australian fundamentals look in relatively less weak shape than elsewhere. But overall, we believe the commodity markets are still very much in a bear trend, and therefore the commodity currencies are going to continue weakening against the U.S. dollar and the Japanese yen.
Vasily, thanks a lot for your insights. That was Vasily Serebriakov of Wells Fargo. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.